Hello and welcome to Pro Trader Strategies Market Commentary for Tuesday, March the 10th. I'm Eric Wilkinson, and you very well may recognize me as the Wolfman from mainstream media, where I've talked about everything from economic to geopolitical and market analysis. I do about the same thing in these daily market commentaries, where I talk about the economic data, the geopolitical environment, what's going on that will affect the overall markets, how I see that, come up with an assumption, and then talk about trades that I layer on top of those assumptions. Anyway, without further ado, let's get on with the economic data. Well, economic data right now really doesn't matter. It's really news driven based on COVID-19 or C-19 for short, coronavirus, whatever you want to call it. That has been the real driver of the overall markets. I'm actually hearing, even in Princeton, there's some people that are coming down with that and coming into midterms for those different colleges that were going to feel the need to go to those classes and take the test despite the fact that they might not be feeling good. Could be an issue. One thing we did get is Italian industrial production came in at 3.7%, knocking it out of the park, expected to be 1.6%. Well, keep in mind, today they basically are locking down that country. C-19 is not really liking the Italians. Most of the other countries are faring very well, but Italy is really having an issue with that and their infrastructure. Their healthcare system is really being overwhelmed with the cases showing up there. So let's talk about the overall markets. We've got crude oil trying to make a bit of a comeback, but still down in those 30s. Keep in mind that we're talking about Russia, OPEC having this big spat, Russia or OPEC trying to hurt, or Saudi Arabia trying to hurt Russia for not following sanctions in Saudi Arabia with the OPEC deals. Russia was supposed to spend a lot of money on infrastructure in Saudi Arabia. They backed out on that, and so Saudi Arabia is still a little bit peeved there, and Russia is kind of mad at the United States and wants to hurt the fracking operations here. All right, so everybody wanting to pump out as much oil as they can. Yes, it's going to hurt Saudi Arabia, it's going to hurt Russia, but ultimately it will probably hurt the frackers more than those guys. All right, so we've got crude oil trying to make a bit of a comeback. Most of that's probably a bit of short selling. I don't know if we're going to get out of these 30s anytime soon because people are pumping oil like it's going out of style, and we already have a glut of these products, whether it's from the distillates manufacturing of the raw crude into distillates being polypropylene for the manufacturing sector or gasoline for the consumer sector. Well, if people aren't traveling, manufacturing's going to slow probably. Media, I think this is more a media-driven thing. I could be completely wrong, but it just seems like, even with swine flu, we had a lot more deaths here in the United States. 60 million people came down with swine flu and 12,000 people died of it. So we also talk about the influenza, which is the common cold that, kills about 5,000 people every month. And we're talking about the coronavirus, which hasn't really taken hold. Yes, it is easily contracted by humans, but it does not seem like the mortality rate is spiking at all. So at the end of the day, I do still believe it's overdone. Yeah, I might have gotten into this a little bit early, but I'm pretty comfortable right now. I think that this market is really whipsawing back around. It feels like, we're creating these capitulation moments. Think about this. This last sell-off yesterday was the biggest down move points in point move, 2014 points, I think it was. Biggest move down ever. That feels capitulation-esque. Keep in mind, though, Caterpillar's in there, and if there is more of a slowdown, that's going to hurt them. There are opportunities out there, I believe, but the market really trying to work through all of this, and I think that there is opportunity. Fear is overstated across the board at any time, and these big moves have been like the 87 crash 2008 on TARP. All of those moves were actually really big problems. I mean, we had the banking crisis, right? I mean, this is a flu that is causing this pandemic going on, and I think that it just seems to be a little bit overdone, to be quite honest. I don't have a whole lot of dry powder left to add to my position, so I'm kind of sitting on it. I only have about 10 days for these things to work themselves out. I might be very well getting long Microsoft at good levels, I think. So I'm happy with it, you guys. As soon as I get long those stocks, if I get those stocks put to me, I'm going to start staying mechanical and selling calls against them. One thing to note with crude oil, we already talked about. Gold is coming off, despite the fact that we're seeing these major swings in equities. So that is a bit of a tell. We do have the VIX still starting to spike. VIX is up. It was up into the 50s a little bit earlier, but we've got gold coming off a little bit here. That's helping my GLD position, which yesterday was being tested. Today coming off is helping me out quite nicely. I don't know that I necessarily want to be short gold. Yesterday, big, huge moves in the treasuries. We've got the 10-year notes here showing up. It pierced below. It had a 0.3 handle. I think 0.37 may have been the low that I had seen, but really a massive spike. People talking about negative rates here in the United States. I don't know that we're going to see that. Trump talking. He's going to help out the airlines, the cruise ship companies, and maybe even start adding tax breaks, trying to get people some extra money, create that velocity of money that I've talked so much about being very helpful. I think lower crude oil prices will help that as well. We talked about that yesterday in the daily market commentary. If you're saving $20 on every fill up at the pump, that money is going to get spent somewhere else. Bonds off by just better than 2.5 points here on the day, coming up at that support level. I haven't drawn too many more extensions in here, but you can see it just feels like we're a little bit overdone to the upside. Doesn't mean that we're going to have a massive V-shaped recovery like I was earlier expecting. It might be more of a slower change in pace here, but I do think that this is still overdone. You can see here the VIX up into the 50s still today. Today we pierced below that, below 45 basically on the open when the Dow Jones was up 1,000 points. But then we got a sell off in the Dow Jones where it actually went negative. Trump started talking about some stimulus and helping out some of the different areas of the travel and leisure, and that started giving us a little bit of a boost there, and that's why we're seeing that VIX come off again. We can see the Dow Jones Industrial Average is now up 300 points after, like I said, going into negative territory when we touch this low, tweezer bottoms, hopefully. Market really trying to work through all of this as, some panic comes in. Tweezer bottoms here in the NASDAQ. But again, well off the lows after being in negative territory and up about 150 points. Dow Jones 1,000-point moves is the new 100, which used to be a big move in the Dow Jones, or a pretty decent move in the Dow Jones. Now it's 1,000 points on a day. We've got the E-mini S&Ps up 34 on the day, and let's take a look at the overnight trade. You can see it got very long. It's pretty strong coming into the day, opened up near the highs and slammed down like I talked about. But in the last half an hour or so, we've started getting that bit of recovery. I think institutional buying is coming in and taking advantage of some of these prices. There is a lot of value out there, especially if you believe that this is just being overdone in the media. That's about it. Like I said, I haven't added anything. I'm kind of sitting on my hands. I was looking to sell some calls in my Microsoft. I was looking at like the 200 plus. I think it was like the 225 handle, which was around the 16 delta, which would have been nice. But again, I think that those puts are going to expire worthless. I only have about 10 days for most of my positions. So I'm going to really next week or later on this week get some massive theta decay and hopefully a little bit of volatility coming out of these markets so that I can get a bounce happening and start covering some of those positions. That's all I've got though. I'm sitting on my hands. Like I said, I probably got into selling these puts a little bit earlier, but I still think that there is opportunity out there if you have a lot of dry powder to get into some of these names that are not travel and leisure. I would stay away from those at this point, but things like Budweiser and Clorox or Microsoft, Facebook, things like that I believe are going to be at least away from the hard impact of this if it starts taking off. I was doing some reading on this coronavirus yesterday though as well, and they're starting to test it more. There's not a whole lot of studies out there with it because it's such a new virus, but it doesn't like higher temperatures. Right now, if it's refrigerated, it does well, but as soon as the higher temperatures come out, it starts not lasting very long at all on just regular surfaces, which is probably why we're not hearing a whole lot of things about the coronavirus in the southern region where it is still summer there, right? We're starting to come into our spring season. The colder temperatures allowing this virus to stick around a little bit longer, but we're not hearing a whole lot about this in the southern regions where the temperatures are elevated at this point because it's their summers. All right, so that's what I've got. That's all I've really got going on at this point. Just kind of keeping an eye on it, watching the news channels, and trying to keep the panic at a low level, right? That's what we need to do. Stay mechanical with this. Take the emotion out of it. Fear being overstated. It is an opportunity for premium sellers. All right, so that's all I got for you, other than if you can't take that, take it easy. Wait, one thing. Got to go over the disclaimer. This is not a solicitation to buy or sell any of these. Keep in mind, past performance of any trading system or methodology is not necessarily indicative of future results. We are an educational company. We are just trying to teach you guys how to trade options and find opportunities. All right, take care.